Welcome to Bears in Exile. Today is Monday, December 5th, and this is the market overview, looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Um, Alright, today was an on-the-road day, so didn't really get to watch as I would like to, but nonetheless, it is what it is. Ending today with the body is a little bit too fat for a proper shooting star or an inverse hammer, but nonetheless, it still leans in that direction on the Dow. And very interesting, we had yelled out in the daily running thread early this morning before the market had opened, maybe shortly while after it had opened, that we were looking for a back away from a previous high, and that the market needed to do that if it was going to actually be credible in its directional move up. We are still of the opinion that the bear counter move, if it's going to happen, should be happening now. And obviously, this was a green day, but on the plus side, the previous high was briefly exceeded, but it did not close above it. It backed away from it and the upper price consensus level for this month. Beyond that, we have the CCI very high, getting too overbought by just a little bit. We have a rollover in the fast stochastic. Slow stochastic is pointing up, looking for the rollover there. 14-day RSI moving average still pointing down, and up slightly in the RSI, histogram, and the MACD. Mixed bag, right? Well, I do believe that once the stochastics roll over, both of them, and head on down to meet the 14-day RSI moving average on the way down, we will have our bearish counterattack. Could that be tomorrow? Yep. Could it be Wednesday? Yep. But nonetheless, I don't think that we're going to have the 14-day RSI flip up, reverse direction, and have the stochastics stuck up here. That just doesn't really make too much sense to me at this moment. I mean, it's possible, I suppose. We have something sort of similar back here where it was pointing down, but notice the position of the RSI at that point. It was already down here on the way up. We're already at the top. So, difference. Absolutely different. We can see that we have some excessive separation and a little bit of wobble in the short-term moving averages, but we do have the middle Bollinger Band below the short-term moving averages. So, yeah, it is a little bit of a mixed bag, but I am still of the opinion that unless it breaks one of these previous tops, the bears are not going to have a reason to cover fully, and they are out there. Now, 60-minute time frame. You can see that we have a possible cross in the middle Bollinger Band, but that is not confirmed yet, as this may not go down to test the bar. This could be just a bubble retest on, or bubble corrective move in the 60-minute time frame. Now we do have most of the indicators pointing down: the histogram, the MACD. Kind of choppy on the RSI, down on the stochastics, down on the 14-day RSI moving average, and a little bit of chop in the CCI. What we also have is negative divergence all over the place. We have it in the CCI, we have it in the stochastics, we have it in the 14-day RSI moving average, if you count this as a little blip. We have it in the RSI, we have it in the MACD histogram, we have it MACD itself, sloping down, sloping up. So there are definite problems here. We just need a bit of news to spark the bearish attack. We do have big Euro news coming tomorrow, and one way or the other, it's going to push the market. Maybe if it's good, we can reset all of these and everything will be just fine and dandy. But if it's neutral, or if it's bad, absolutely, we can have that bearish move. SPX. This has a fatter real body than the Dow does, hence it is not a good candidate of any type for a shooting star or any other kind of reversal pattern, except for that it also did not close above a previous high. It also did not close above the 200-day moving average. If either of those criteria were to be broken, then we would have to reevaluate. But I do still expect there to be a move down to the middle of this candle, or possibly even towards the bottom of it. But that is my thesis. I'm sticking to it until it is proven wrong, which could be tomorrow. You'll notice all the indicators are essentially identical to the Dow. No need to rehash. Moving on to the VIX, still below the psychologically important $30 level. We ended today with a spinning top. We do not have an uptick in the short-term moving averages as of yet. We are holding above the 200-day moving average. We still have the middle Bollinger Band above the short-term moving averages. Woo! Kind of a push-pull there. Flying the ointment, 14-day RSI moving average pointing down, although we do have the hook in the stochastics. Down in the RSI, slight down in the histogram, down in the MACD, up in the CCI. Very mixed bag, most troubling thing being the 14-day RSI moving average pointing down. That's not good. No, no, no. We do have a chance of trying to do some damage to it with the stochastics going up, but as half of them are still in the negative, highly negative area of oversold, we need to get them out above the 20 before we see some real improvement on the VIX. So have to hold 200-day moving average, very important. Have to hold previous low, very important. And that's really all there is to it. 60-minute time frame. Do we have anything to work with? Well, at the moment we can see that we have a positive bias in the stochastics, the 14-day RSI moving average, but it also appears like it is trying to roll over. Notice the height of the stochastics, CCR already rolling over, RSI rolling over, and not exactly pretty, not the end of the world, but definitely a warning sign. And with the stochastics, if we get a rollover in those, then that would line up with the 14-day RSI in the daily time frame, indicating some more movement to the downside. So it is a dangerous point in time. Absolutely. We do not have good confirmation really at all in the VIX towards a bearish move. So my thesis with the Dow and the SPX of a bearish counterattack definitely could be wrong. I don't think it's wrong as of yet, but it could be broken as of tomorrow easily. TNA had a very nice move today, even better than the Dow and the SPX, going to its high of almost $48, ending with a spinning top, and we still have the middle Bollinger Band below the short-term moving averages. We have the stochastics getting high, CCI getting high, RSI on its way up, along with the MACD with a bullish cross, uptick in the MACD histogram, 14-day RSI moving average slightly pointing down. Moving on to the 60-minute time frame just to see what we have. 14-day RSI moving average pointing to the downside along with the stochastics, along with the bearish cross of the MACD, downtick on the histogram, uptick on the RSI and the CCI though. We'll also notice that we have negative divergence in the CCI, very, very mild in the stochastic, almost non-existent. We have it in the RSI, we have it in the histogram. There's a lot there. So do I think that the move in TNA is overdone? Actually, I kind of do. But we're going to see. If we break, if we close above the previous high, watch out. It's too close to that at the moment for me, so I am waiting and watching, and if we do have a breakdown, perhaps do something, but I do expect a reversal, not too far down, just like the down to SPX, and then have a move up. We'll see if I'm right. UUP, very interesting. in that we closed essentially right where we were yesterday. Yep, exactly where we were yesterday. It was a green day, but no movement to the upside, so the markets were not hurt. Still have the middle Bollinger Band line above the short-term moving averages, but we do have a bullish long-term moving average bar. We are above the 200-day moving average, above the major price consensus level for this month. We actually tested it and bounced off. Slight down on the CCI, essentially neutral. Uptick on the 14-day RSI moving average. Looks like we may be getting the curl of the stochastics. Downtick on the RSI. Slight downtick on the histogram, and getting the bearish cross on the MACD. Essentially, everything is going to revolve around tomorrow in the extremely short term with the Euro news. But 14-day RSI moving average pointing up, and possible curl of the stochastics would make me be more of a believer that the dollar is going to go up. FXE, the euro, went down slightly today. Bearish bar in full effect below the major price consensus level for this month. This does look like a corrective move with a possibility of a bar retest that is now falling apart. 14-day RSI moving average pointing down. Stochastics possibly getting the curl to go down. Uptick on the RSI, the CCI, the MACD, and the MACD histogram. So a little bit of a mixed bag, but the positioning of the candles along with the 14-day RSI moving average and the possibility of a stochastic curl leads me to believe that the euro should be going down. GLD. Ooh, look at that. We were worried about possibly going back into a double flatline, and today's action seems to lean in that direction. Just totally ugly. Downtick on the 14-day RSI moving average. We're getting the cross of the the fast stochastic with the slow stochastic. Downtick on the CCI, downtick on the RSI. Slight downtick on the MACD histogram, and MACD is trying to figure out what to go do with itself. This is ugly. I do not like this. This is not. This doesn't give me any kind of warm fuzzies with what it's doing. Flatlining the long-term moving averages could easily turn into a flatline with the short-term moving averages, or a dump down with the position of the 14-day RSI moving average and the stochastics. Not attractive. SLV went up for a bar retest. It appears to be failing. We have a bearish long-term moving average bar. It is not very strong, but nonetheless it is there. 14-day RSI moving average pointing down, getting the cross of the fast and slow stochastics. Fast pointing down, slow pointing up. If the slow starts to point down, terrible. Down on the CCI, down on the RSI, down on the histogram, down on the MACD. Ugly, ugly chart. And that's it. We are waiting for Euro news. There was a story about S&P possibly downgrading all of Euroland in the months to come. I personally don't think that that is a really huge event, because it is so far out and everything can be manipulated in between now and then. But perhaps it is a tell that the first quarter of 2012 may not be so pretty. And that's it. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.